All right. Good evening, traders. Today is July 22nd. Welcome to Price Plan Profit. I'm Melissa. And tonight I'm going through my daily trade recap, what I traded and why, and of course taking a look at the S&P 500 and the key levels that I am watching not just for today, but for this entire week. I want to get started. I'm going to share my screen real quick with you, and then we're going to look at the S&P 500 ES futures chart from a weekly time frame all the way down to a day trading time frame. So on the weekly chart here on the S&P 500, we have the all-time high that we created yesterday at 63.74. The market is extended from its 9 EMA on the weekly chart. That level's coming in at about 61.75. We did create an inside candle here a couple of weeks ago, and last week we pushed up above that candle. So it created a buy zone down here on the weekly chart of 62.74 by 62.23. And of course, the 61.75 below, which is a key EMA level that I watch. On the daily chart, we are just slowly creeping up. Now, what I liked about today's candle, this is today's candle because, of course, the overnight session is kicked off and in full swing to the upside so far. But today's candle came back and touched the 9 EMA on the daily cloud. This was important to see what was going to happen with the market. Were we going to drop further back into the psychological level of 6,300 and then buy the dip in this zone? Or were traders going or buyers going to step in right at that daily 9 EMA? And by evidence of this candle, you can see that buyers stepped in on the touch of the 9 EMA. Because of this bottoming wick, we created an inside candle today because we closed inside the body of yesterday's candle. But this is a bullish sign when you have buyers overpowering sellers to push price up from the quick pullback that we had this morning. Looking at the ES 4-hour chart, you can see the pullback. It actually wicked below my buy zone on the 4-hour chart. That's why I commit to candle closes before stopping out, so that I am not wicked out of my trades only to watch price go back in the direction that I was trading. So, a prime example there. My 4-hour buy zone remains the same, 63.42 by 63.23, or I could use the low from today, adding about 5.5 points of risk to this buy zone and use 63.1875. My bias remains to the upside on all swing trades because we have remained in a bullish trend, and the daily and 4-hour clouds on pullbacks to them have worked as support. Now let's talk about what today's day trade setup look like. My favorite indicator right here for day trading is the PMZ, or pre-market zone. Very simply, price above it is a trigger long, price below it is a trigger short. Today's opening candle went below PMZ first, then we got an engulfing 5-minute candle right back up to the upside. It hit this upper liquidity chop, which was a pre-market high, and we got a trendy turn signal to the downside. That told me wait, wait, wait to go long above the PMZ. I did not like this candle formation. Once we created that next inside candle that closed inside of the PMZ, with the trendy turn signal to the downside, I was looking for the market to pull back, and that's exactly what it did. Right down to my 4-hour buy zone that I had on the day trading chart this morning. Now, I warned the trendy traders that you need to be careful here. These 5-minute candles are very aggressive, they are imbalance candles, and there could be some market manipulation going on. So I encourage traders to, if they were short below the PMZ, to stay in those shorts until price could get back above the bear channel or the 23.6 by the 38.2 Fibonacci levels, measuring the move from the high to the low. This zone did work. These are 5-minute candle closes, not 2-hour candle closes. We created an inside candle down here at the bottom of the zone. It's highlighted in yellow there. Once we created this inside candle and price got back above the bodies of these candles at 63.25, that was game on to play a relief bounce to the upside and then just stay in the position as long as price continued to hold above that bear channel. That's what happened. We chopped around here for quite some time. It looks like 2.5 hours. Price just chopped right in or at the buy zone. We got a trendy turn signal here, then a buy arrow that indicated that we were ready to move back to the upside where we hit the PMZ, a double top here on the upper liquidity chop level. We got to pull back to the zone again. Back up she goes. And really, aside from the first 45 minutes of the market, it was pretty choppy all the way into the end of the day. So, if you were able to catch that move to the downside and then catch the inside candle formation for about 20 points back to the upside, then you had a good solid two trades here, one to the downside and one back to the upside. Now, what am I looking for tomorrow as potential buy and sell zones? I have no candle structure on a 2-hour chart above where price is at. I simply have these targets: 63.60, 63.61 by six, then 63.67 and a half. 63.74 is the all time high. Above there, these are Fibonacci extension targets that we can trade to the upside if we make a new all time high tomorrow. My buy the dip zone will stay here at 63.36 by 63.18, which was today's low. I will not know where the PMZ is going to print in the morning, but once I do, that PMZ will give me the bias. If price is above it, my bias is to the upside. And if price is below it, my bias is to the downside. First targeting this initial buy zone 63.36 by 63.18, about 18 points wide there. If we make a new low, right, and bears gain control, and this was nothing but a rally back up into resistance. If we make a new low below today's low, my next buy the dip zone would be 63.03 to 62.88. Below there, I'm looking at 6271.75 by 6241. So there are some buy zones for me and the S&P for tomorrow. Now let's talk about some trades that I was able to collect profits on. I also have some new trades that I started, a day trade that I started, as well as a couple of trades that I added to as I had planned when I originally got in the trades. So, the first trade I want to talk about is Bank of America. I was in the, give me one second. I was in the July 25th $47 calls. I paid 56 cents a piece for those down here. And I was able to trim out some of them. I told the room I was watching 47.78 to see if it would price would close above there. And believe it or not, it closed 1 penny below. I went ahead and exited this position for an average of 55% total gains. As we trimmed up here, the position was well over 100% gains. But an average of 55% gains on this trade. Nice trade. I'm not sad that I got out of it. I was running out of time to expiration, and I know that I can always look for a new trade. So let's talk about those zones that I would be interested in setting up a new trade on Bank of America. I would need a pullback to the buy zone down here at $45.90 by $45 and a penny. So that is 89 cents of risk inside of this zone. As far as targets go, I would first be targeting 47.78, then 48.38, and finally 48.78 by 49.50. You can see that I have less than $1 of risk, and my first target is almost $2. I like the risk to reward on this trade, but I would need a pullback at this point. Next up, I want to talk about Uber. Tesla reports tomorrow, and I did not want to risk my profits on Uber in the event that Tesla's earnings report affects the Uber position that I was in. So, what I did is went ahead and collected profits. They were not big, 15%. Not big, but I'm protecting my capital at this point because Tesla's earnings report could affect Uber's price tomorrow or after the market tomorrow. But nonetheless, the price could be affected. So I went ahead and took the easy money here for about $100 a contract, and I will of course, be interested in re entering this trade. I still like the trade. My buy zone would remain the same. That is $90.11 by $87.68. My target would be $93, then 94.76 and 97.91. I like the trade because we are still in a 4-hour squeeze. The histogram is shifting to the upside, but I would want to buy the dip in a demand zone and look to take my profits in the supply zone. So that would set up a new trade for me in Uber if we get that dip. Next up, I'll talk about iBit. So I was in some July 25th calls on iBit. And at this point, we're running out of time. And yesterday, I was able to start another position Still the $65 calls, but I was able to start that position at the lower weekly edge, and I bought more time out to the August 15th expiration. So for those shorter dated calls, I exited up here for an average gain of 25% on the trade. I entered back here at this buy the dip, $66.19. Exited one contract earlier or this week, and then exited the other contract as IBIT came up, or Bitcoin itself came up into the golden pocket from the all-time high to the swing low. But I still have exposure here, like I mentioned, from 66.18. That was a position I got in yesterday, and I'm targeting 69.06 by $70.07. Up next, I want to talk about Qubit, QUBT. That is a trade that I started yesterday, and price came down to my ad. I told the room that I was waiting to see confirmation by higher lows inside of my zone. My ad was at planned for $16.44. So what I did is went down to a smaller time frame. Started watching a 2-hour chart here, looking for confirmation that we were making higher lows. Once I got that confirmation, I went and added to my position. Now, obviously, I am in three quarters of my total allocation. So I will be trimming some of those ads at $18.47 because we have the top of the daily cloud here, as well as the daily 21. That is a place that I would be expecting resistance, and I would take some profits off there. Then 1924 by 1978, $20.49 by 2188. And if quantum computing wants to get back in gear, my final target is $24.05. I also got an opportunity to add to my Red Cat Holdings position. Same concept in that I did not want to add on a falling knife. This was my planned area to add to the position at. Once my alert went off, I went down to that smaller time frame, again looking for confirmation that a low had been put in. I saw this trendy turn signal inside of my buy zone, and that was what caused me to go ahead and add to the position, planning to trim at the top of this cloud here on the 2-hour chart, but also a key Fibonacci level of the drop. So $10.28 would be a trim, then $11.31, ultimately targeting 1277 and 1527. Now, in the event we get a further pullback in our cat, I do have a quarter of my allocation to add at $8.35. My stop remains the same. A daily candle closed below $7.79. Now let's talk about a day trade that we were able to take in the trendy room this morning. It wasn't great. I mean, it wasn't bad, 24% profit in 15 minutes. But the important thing is that we used the pre-market zone, or the PMZ, to take this trade, and then used our profit targets to exit the trade, protect the capital, and go ahead and get out. entered on a retrace to the top of the PMZ here at 11:15 Eastern Time, exited at 11:30 a.m. Eastern Time at first target, then protected the capital on the remainder of the position and exited just above break even. I think about 10% above break even. So, that was a great day trade on Rocket Lab in a market that was a little harder to trade if you weren't in for the first 30, 45 minutes of the market. The price action got a little choppy there for the rest of the day. So, pretty excited about getting a day trade on a name like Rocket Lab and collecting a quick 24% profit. So that was my trading. Oh, wait. I can't forget about Hecla. Almost forgot. This thing has been great and got another trim today. These are outdated out to the September 19th $5 calls. I do not plan to hold this position all the way to September. I bought those that expiration because of liquidity. So, got the trim today right here. It didn't quite make it to $6.40, but it came close enough. It came within 5 cents there. So, I went ahead and took the trim. It was a nice profit. And next target 669 and $7.17. I do have a break even stop on this trade. So the profits that I made from the first two targets are locked in, and the remaining two targets, the worst that could happen is I lose unrealized profit there, but the trade would still be a winner. All right, that's what I did today in the market. I hope you had a great day. If you would like to trade live with me and my trading partner, Trendy John, every day, and our absolute amazing community of traders at Simpler Trading and in the Trendy Trading Room, then check out the link in the description below where you can join us on a 7-day trial for 30 days. Fall in love with what we're doing and become a part of the Trendy family. So, until the next video, I hope you have a wonderful rest of your evening. And for all my Trendy family, I will see you in the morning. Have a great day, guys.